Hi, I'm Bevan Wurzba, CEO of Southbow, and you're watching Taking Stocks.
Historically, the S&P 500 finishes up 1.4% for the month of December, but at least for today, this Cyber Monday edition of trading here on Wall Street for this Monday, December 1st, not exactly the tail of the tape, as we are expected the S&P 500 to finish down for this first trading day for the month, 0.6%, a fair bit of profit taking specifically for the AI trade. A handful of those key names down in negative territory. That includes Meta, Google, and Broadcom. We also got the crypto majors once again getting throttled. We'll talk much more about Bitcoin, Ethereum, Solana, and all of the rest here on the show. And speaking of the show, this Cyber Monday edition of the show, welcome to it one and all. You're watching Taking Stock. I'm your host today, JD Durkin. We are just moments away from the ringing of the iconic closing bell here at the New York Stock Exchange. The team from CIBC here to celebrate Miracle Day with about a minute left or so to go until the bell. It has been a very choppy November, to say the least, at least choppier than expected. We did see the NASDAQ last month fall off 2%, but fractional gains for the S&P 500 as well as the Dow Jones Industrial Average. Both of those major market indexes now up for 7 consecutive months in a row, and all that and so much more sets the stage for a busy, jam-packed month here on Wall Street ahead. Silver trading at an all-time high on the day. We're also seeing volatility creep back up here on the session with the VIX back up to 17. The great Einstein of Wall Street, Peter Tuchman himself, is on deck. He'll join us right after the bell to get his take on today's price action and so much more. But for now, the team from CIBC here now to ring the closing bell. I like the dramatic pause between the second and third gavel strike. All right, final tail of the tape here for the first trading day of December across the major market indexes. See what investors had in store. Not quite finishing down at session lows, but the S&P will finish down 0.5%. The Dow down 0.9. The NYSE Composite Index selling off on this Cyber Monday, 0.7%, with the small caps, as to be expected, bearing the brunt here of that risk-off trade, down 1.2%. Let's bring in the man himself, the institution inside the institution, the great Peter Tuchman, senior floor trader at TradeMoss. How's your Thanksgiving? Thank you for joining us.
Thank you. Beautiful. Beautiful. Thanks for having me.
Of course, it's great to see you. So seasonality, we always talk about how strong this time of the year can be. A little bit of profit taking, nothing too nuts here for the first trading session of December. What did you see into the close today?
I'm so happy you said that, because you're not a catastrophist. You're not reading into the fact that we're down for one day after 5 really spectacular rally-ish bullish days to end out November, which was at best a really skittish month, right? So that's what it feels like. It was profit taking. Let's think about it. We have to look at November. To understand today, we have to look at November. In November, as we said, November is supposed to be the most robust of the months, right? September, October is supposed to be weaker. They were robust. November is supposed to be robust. It had that sort of psychotic flash in mid part of the month that, based on that, I don't know what you would even call it, the illusion, the narrative that we were talking about, that AI is a bubble and all that stuff, and then a little bit of the poking of the bear when Jay Powell decided to say that we are, interest rate cut in December is not a surety, and then everything just switched around. We went from literally a probability of 15% of a cut to 85% of a cut, and the market told us exactly what it thought of what was going on, right? Because that 15% market sold off 1,000, the 85% it went up 1,000. So it showed us that a lot of the guys, the powers that be, have very heavily interest rate sensitive positions coming into the end of the year. Today, I think so, but we ended up November with 5 spectacular days. We got back 4 or 5% of those losses that we suffered mid-November. And so all of that really sets the stage for what's happening here today.
Yeah.
It is the beginning of the month. A lot of the funds are probably shutting themselves down, right? A lot of people, a lot of the bigger guys, family offices, hedge funds, institutions will some of their internal hedge funds will shut down their books at the end of October, then some at the end of November, to try and preserve what good profits they had, right? Many of them did shut down at the end of October. For a while there, mid-November, they were happy they did that. right? Because a lot of people who stayed in gave back about 4 or 5%. They were able to eke back out a beautiful profit coming into the end of the month. But think about it, if you were somebody running billions of dollars and you had not sold at the end of October and you had you held on, but you did benefit from those last beautiful 5 days of November, what do you do today? My gut is you take profits.
Yeah, all right, talk to me. What else is on your radar in terms of overall volume? I've learned a lot about breadth. We talk advanced to declines, which favored the declines on Wall Street today. What are you looking for in terms of volume for the entire holiday month here, really in the heart of December? As a lot of people are maybe starting to check out a little bit towards the end of the year.
You know what, look, for us, it's the busiest time of the year. Like, you're going to have an S&P rebalance, the biggest one of the year. That's going to be huge. You're going to have a Russell rebalance. That's going to be huge. Obviously, we had our MSCI, so that's not going to be it. But you're going to see a lot of rotation, a lot of tax harvesting, a lot of profit taking. In years where the market is up double digits for the year, you are going to have people, setting themselves up, especially if things follow suit the way they're promised by Bessent, that we are going to have a new Fed chair, a very dovish one, coming into the end of the year with that announcement. Then I think it's really important for everybody to realize that if he follows suit with what the president wants, that's 300 basis point cut over the next 3, 4, 5 months. Okay, and so that really lights a fire under the market. That jumpstarts so many sectors, real estate, housing, stuff like that have been a little bit, at best stagnant based on higher interest rates for as long as they've been that way. We love December, because there's option expiration, it's spectacular. S&P rebalance is spectacular. You're going to see a number of really large volume days. We closed out the day, where are we here?
About 1.1 billion in total volume. That's about average. That's our 2025 average.
We've been inching ourselves above $1 billion a day.
Oh, yeah.
For a while now, and that's good volume. That's an extra 200 million a day is reasonable, and so it is important, as you and I have discussed often, that looking into the advanced declines, it's kind of looking into the nuance of the market. It's important because you get a sense of, are people really selling? Are they taking profits, or is there rotation going on as they position themselves into the end of the year?
At least today, a bit of a broad-based sell-off. 65% of all publicly traded companies were down for every one stock up. Nearly 2 stocks were down. I pulled that information right before the tape here into the close. Gives us a sense on breadth and overall price action.
If you look at the way the chart looks today, it was kind of a wild roller coaster of a day, right? And I just kind of think that was like the sellers came in, the buyers backed off, the buyers came in, the sellers stepped away. So it was one of those, it was a roller coaster.
My favorite guest to kick off, not just the broadcast, but the month of
Happy December, happy
Peter
trading.
Tuchman. Thank you for joining us as always.
Thank
Josh
you.
will grab your microphone. I'll see you tomorrow. Jeff, you and I are going to head this way. Excuse me, one and all. We are coming through with the broadcast. Thank you. We're going to head back this way. We'll now bring you, my man, what's cooking? Hey, Alex, what's up? All right, we're going to bring you the latest event contracts for a Polymarket odds wager that's being very closely watched, as Peter Tuchman and I were just talking about. Who will President Trump nominate to be the next chairman of the Fed? We've been bringing you the updated odds here week to week. And after a lot of busy weekend commentary, it does appear as if Kevin Hassett from the Trump White House, the odds-on favorite, 75% chance. He was asked about it this weekend in some of the Sunday shows. He kind of deflected, but Hassett did point to a more positive than expected market reaction last week when that first suggestion came out. It would be Hassett. Former Fed governors Kevin Warsh at 12%, Christopher Waller at 7%. President Trump has said look for him to announce that pick between now and Christmas. Jeff, quickly before we toss the break, we'll take a look at 2 NYSE notables. First up, one of the biggest home builders on the planet, Home Depot, up despite a recent downgrade from analysts at Stifel. Its 4th positive session in a row here on Wall Street. The stock is up 9% off of its recent November 19th low and is currently trading on the lower half of its 52-week range. Finally, Jeff, we'll take a look here in honor of Cyber Monday at Target. This is the hardest hit major retailer, so getting throttled down 32%, but having a nice day, up almost 1%. Adobe Analytics forecasts that Americans will spend over $14 billion, yes, billion with a B, $1 billion here on Cyber Monday. You expect Target to be one of the many beneficiaries of that increased holiday consumer spending. The New York Stock Exchange's very own Kristen Scholler sat down with Michael Gao of Smarter Technologies to discuss all of the ways that data science enables higher quality healthcare. Take a look.
We're at the Health Innovation Conference 2025 at the Venetian in Las Vegas, talking to all sorts of leaders about the future of healthcare and health technology. And joining me now is one of those leaders, Michael Gao. He's the president of Smarter Technologies. Michael, welcome.
Thanks for having us.
Great to have you here, of course, at the event. And I'm curious to hear from you, what do you see as the future of healthcare?
It's a great question. I think it's very hard to predict the future, but I would say it's one in which all the dollars we spend on healthcare are going toward the actual delivery of care and going towards things that improve health, as opposed to things like administrative costs or revenue cycle. And so I think the future of healthcare is one in which a lot of these ancillary support functions are actually automated and done by AI. And that allows doctors and nurses and others to really focus on what matters, which is providing care to the patient.
Health technology is very much a key theme of this event. How is technology like artificial intelligence shaping Smarter Technologies' vision?
It's really the core of what we do in the first place. And between Smarter DX originally, Thoughtful, and even a lot of the work that Access was doing, as well as Pieces, we've really assembled AI assets across, kind of all parts of revenue cycle and the clinical workflow itself. So it's really just part of everything we do. And what we're trying to do is bake in revenue cycle and clinical intelligence across all points of translating that patient care into an invoice and then getting paid on that invoice.
You referenced Pieces. Your company acquired Pieces technology. What was behind that?
As we move into the future, AI assistants will be able to provide insights, for clinicians, not just on the clinical context, but on the administrative and RCM things they need to do to kind of capture that care correctly. And so with Pieces, that really was a point of integration into that clinical workflow. And what was so amazing about Pieces is that they actually have, on a voluntary basis, sort of upwards of 90% physician adoption for the note generation that they were doing. And so we were just super excited to take that, kind of clinical tool that physicians love and bake in, kind of RCM and administrative insights into that clinical assistant.
What is next for your company, Smarter Technologies?
I think it's really about, for lack of better words, reducing the cost for health systems of RCM. And, revenue cycle is this abstract, word for anyone who's not in healthcare. But fundamentally, that's two steps. It's generating the invoice for the care delivered, and then jumping through the, give or take, 257 hoops needed to get paid on that invoice. And today, that cost is about $500 billion for our health system. And so, I think our North Star is just to compress that in a way that it's no longer a burden for providers.
We're here at Health. What do you want to take away from this event?
I think it's such a great event with, so much energy and a lot of people applying AI in, really, really innovative ways. So I think for us, it's about understanding what other people are doing and thinking really hard about how we can translate kind of innovation into real results for our customers.
Michael Gao, of course, president of Smarter Technologies. Thank you so much for sitting down with me here at the event.
Thank you so much. Really appreciate it.
Welcome back to the broadcast. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for a few fintech, crypto, and AI-related headlines for your Cyber Monday. First up, the crypto majors, BTC, ETH, Solana, all sliding in a big way today as the risk-off trade taking center stage to start December. Bitcoin currently trading down about 5% or so from this morning. Next up, Kalshi and Polymarket posting their biggest month ever in November, nearly $10 billion in combined volume. My goodness, this is the two platforms tighten their grip on a fast-growing prediction market duopoly. And finally, in the world of AI, ChatGPT launched 3 years ago today, and since then, generative AI has turned OpenAI into a global power, rewired tech and markets, and now sparked fears, at least among some analysts, of an emerging tech bubble. Joining the broadcast now at this time is Keith Grossman. He is the president of MoonPay, joining us here at the FinTech TV set. My man, thank you for being here.
Thank you so much for having me.
Hope you had a great Thanksgiving. It's nice to have you on the show today.
Wonderful, thank you. What about yourself?
I got no complaints. It's great to be here. Talk to me first and foremost about your work at MoonPay. What are your top priorities for anyone watching who might be a bit unfamiliar with your work?
Sure, so in the most simplistic sense, MoonPay is like the PayPal of crypto, right? And it's just a membrane that allows people to enter in and exit out and trade within the crypto ecosystem, and that can include any of the crypto assets, including stablecoins, right? The thing that was most on our mind was the fact that last week we announced that we got the New York charter, right? We're one of only a handful of companies that have been able to do this in the past few years that have both the BIT license and the charter.
What is the process like to go about getting a New York Trust charter? It is an amazing sounding headline, the likes of which all of us, myself especially, I have no idea what it takes to actually pull that off.
It takes quite a lot of time and a lot of process, but like what it ultimately does is it is a validation of sort of the compliance and the regulatory adherence that we have as a company to be sort of as compliant as you possibly can be within the ecosystem.
Keith, in what ways have you seen the regulatory rules of the road shift here in 2025?
Sure. So I've written quite a bit about this one. Is like we are entering in this golden age of crypto, right? And like for 15 years, the crypto ecosystem sort of grew up in this fog of grayness where there was no clarity. For the first time ever, you're seeing clarity from a regulatory perspective, from a legislative perspective, from a banking perspective, and from an accounting perspective. And so like what you're seeing is with that clarity, that's giving stability, which is giving capital influx. People think that the clarity is extreme sort of like freedom. It's not. It's just the ability to have conversations, something that like we just weren't able to have prior to this.
As we see more clarity, as we see more institutional adoption, separate that from the price action sell-offs that we've had as of late. I mean, how should people kind of take, on the one hand, the conversation that you're talking about, but also see headlines on a day like today where ETH is down 7% and Bitcoin's down another 5%?
Yeah, so look, crypto's a volatile asset, right? And like the other day, I was in the Wall Street Journal quoted as, what did I think of this crypto slide? And I was actually getting like my kidneys scanned for kidney stones, right? And I was like, I'm more concerned about the kidney stones than anything else, right? And the reality is if you're in crypto long enough, like crypto kills nerves. And so like my advice to anyone is it's a terrible business to be in if you're looking for short-term action or stability. It's a wonderful business if you're looking at the longer-term trend line of it.
What does the stablecoin conversation look like for you and MoonPay as we round out Q4 of 2025?
Sure. I mean, look, stablecoins is another vertical within crypto. Like the thing that people don't understand about crypto is they think crypto is a vertical, right? Like TV, what we're on right now is a vertical. Radio is a vertical. Print is a vertical. Digital is a horizontal. Crypto is just an extension of digital, right? If it could be digitized, it could be tokenized. And so what you have to realize is that stablecoins is just another vertical within the horizontal category of digitization. Bitcoin is one vertical, the ETFs are another vertical. What stablecoins ultimately allow for is for real world dollars to be able to enter into the digital world. I think the thing that people should think about if they want a mental model is go back to when you used to look at those long distance phone calls that were like $2.14 a minute to call India or $1.90 to call France, right? They don't exist anymore. Why? Because the internet absorbed telephony with voice over IP. Like for the first time ever, what stablecoins are allowing is the internet to have an embedded finance layer. And so you're only going to see that adopt more as this goes on.
Yeah, we will see what the crypto outlook is for the rest of Q4 2026 and beyond. Keith Grossman, president at MoonPay. Best of luck to our beloved New York Football Giants tonight, Monday Night Football. We'll see what
Giants.
happens. Thank you for being here. It's good to have you. Folks, don't go anywhere. Much more Taking Stock coming up live from the NYSE trading floor right after this, including the latest on startups, raises, and rounds, and an interview with Eric Price of CIBC. Don't go anywhere. Welcome back to the broadcast. You're watching Taking Stock live from the New York Stock Exchange. Now we'll bring you the latest headlines you need to know in the world of startups, raises, and rounds. First up, Databricks reportedly seeking a new $5 billion funding round at a stunning $134 billion valuation. It's roughly 32 times its expected 2025 sales. That according to a report in the information. Next up at this hour, NVIDIA pouring $2 billion into Synopsys. It's a new multi-year partnership announced this morning, a move that tightens its grip on the AI chip ecosystem. And finally, Germany's Black Forest Lab securing $300 million in new funding for its high-end image generation models, which boosts its valuation to $3.25 billion. All this as demand surges from Adobe, 11 Labs, VSCO, and much more. Say hello now at this point of the broadcast to Eric Price. He is the head of U.S. capital markets at CIBC. Just rang the closing bell here at the New York Stock Exchange. Welcome. It's great to have you on the show.
Great to be here. Thanks for having me.
Can I get your perspective first and foremost? What is this like to ring the iconic closing bell for you and the whole team here at CIBC?
Amazing. Once in a lifetime experience, even if you do it more than once.
And have you done it more than once? You've been down here quite a bit in the community.
The exchange has been very generous to us. 12 years in a row, we have rung the bell to celebrate Miracle Day.
That's awesome. Talk to me first and foremost about the priorities for Miracle Day. And what is it all about here, Eric, for everyone watching the broadcast who might be a bit unfamiliar?
So, for 41st year of Miracle Day, some very smart brokers many years ago, 1984, decided that we could turn the markets and the momentum of the markets into tangible support for kids. So once a year, we give all of our fees and commissions to children's charities in the area.
So how has that evolved over these last few decades, or is it still pretty much adhering to those original core values from all those years ago?
It absolutely is sticking to the core values, but turning the financial markets into tangible change has happened a lot more recently than it did back in 1984 when we started it. We have huge celebrity support. We had a couple of special guests with us today up at the Bell. Their first time doing this, they had a blast. We look forward to doing it for another 40 years.
Yeah, what does this mean ultimately to the children, to the communities that you're working alongside of here specifically for Miracle Day?
You know, there's a lot that comes from seeing the work you do support the kids. And so Miracle Day has evolved when we do it on our trading floor the first Wednesday of every December into having about 300 kids from the foundations we support on the kids. And they express their appreciation for everything we do. One of the charities we support builds bunks at summer camps, and they named one of them CIBC, and the kids who lived in that bunk come in and can't thank us enough. It's really quite moving.
That's amazing. Well, congratulations on a tremendous day here, and of course all the many years of incredible work. Before I let you go, talk to me what else is top of mind, top priorities for the company, and kind of what you're seeing more broadly across the economy. As of course this is a market show live from the New York Stock Exchange, and I want to pick your brain on the markets at least a little bit.
Yeah, no, we're very optimistic on the markets, and we're very optimistic on CIBC stock, despite a day that's been down a bit. We're looking for rates to be cut in December and continue a couple more cuts into next year, which we think will keep the economy moving.
All right, Eric Price, head of U.S. capital markets at CIBC, here to do the honors for the closing bell and to celebrate Miracle Day. Congratulations on the great work.
Thank you for having us.
Great to have you here.
Thank
on the
you, New York
show.
Stock Exchange.
Folks, don't go anywhere. Much more Taking Stock coming up after this quick break, including the latest from Money 2020's Chief Strategy Officer, Scarlett Sieber. Don't go anywhere. More show after this.
Welcome back. I'm Scarlett Saber from Money 2020, and this is Jargon Translator, where we turn finance speak into plain speak. Today's term, stablecoin. Sounds chill, but it's the backbone of crypto. Picture this, you're deep in the crypto world. Prices swinging like a TikTok trend. Up today, down tomorrow. You need something steady. Enter stablecoins. Stablecoins are digital tokens pegged to real-world assets, usually the US dollar. So while Bitcoin is out here living its best roller coaster life, stablecoins stay, well, stable. Why does this matter? Because they're the glue holding the crypto economy together. Traders use them to park money during volatility. DeFi platforms use them for lending, and some people even use them for everyday payments. But here's the twist. Not all stablecoins are created equal. Some are backed by actual dollars in a bank. Others, algorithms and vibes. And when those vibes fell, well, Terra Luna crash. So next time you hear stablecoin, think less boring and more essential. It's the calm in the crypto storm. And that is your Jargon Translated. Back over to you.
Welcome back to the broadcast, this Cyber Monday edition of Taking Stock. The very first trading day for the month of December will get you quickly caught up on all of the price action you may have missed here on Wall Street today. Final tail of the tape for this Monday, December 1st, the S&P 500, a little bit of profit taking across the board. The S&P down 0.5%, the Dow 30 components down 0.9%, with the small caps down 1.2%. Out of the Dow 30, the strongest performers in that particular index include Disney, Nike, and Nvidia, all up in positive territory in no uncertain terms, while the laggards in the Dow today include a few healthcare stocks, given healthcare was the weakest performing sector in the S&P 500. We saw downward pressure in the session on names like Amgen, Merck, as well as McDonald's. At the top of the show, we were talking with the great Einstein of Wall Street about advance to declines, the breadth and what it tells you about more of a broad-based sell-off. It wasn't really just a tech-led sell-off on the day. For every one stock up, nearly two stocks were down. About 64 to 65% or so of all publicly traded companies today did finish this first trading day of December down in the red. The strongest performing sectors for the S&P 500 on this Cyber Monday included energy, tech, and telecom. And like I mentioned there a moment ago, a lot of downward pressure on healthcare stocks. But remember, as of late, as we've had that more defensive risk-off trade, it's actually been healthcare that has surged to the front, sometimes pushing discretionary and technology shares back as well. We'll also get you quickly updated on the crypto majors. Bitcoin falling 5% on the day, Ethereum down almost 8% on this Monday, December 1st, and Solana down 7% as well. Silver in the precious metals conversation reaching a fresh all-time high. We'll talk a lot more about gold and silver on tomorrow's broadcast. And as we said at the top of the show, volatility creeping back up just a little bit here on the day, with the VIX finishing the final tail of the tape back just over 17. That big sell-off in Japanese debt overnight really kind of moving treasury yields here in the U.S. The 10-year treasury yield up 8 basis points. That's going to do it for today's edition of Taking Stock. Have a great night, and we will see you tomorrow. Yeah.